Welcome back. July through October is typically when ocean freight peaks ahead of back to school and holiday and year-end demand. This year's a little different. A lot of shippers, as you know, front-loaded their inventory ahead of tariffs and during that 90-day pause. Now the industry's watching this August 1st deadline. Ryan Petersen joins us today, the CEO of logistics company Flexport, with what he's seen. And Ryan, what the inventory trajectory is from here after a couple months of pretty stagnant business inventories, at least.
Yeah, we are hearing that from our customers. In fact, we did a recent survey. We serve several thousand American businesses, helping them with their imports of both ocean freight and air freight. And 77% of our customers told us that they had enough inventory in stock. And that's pretty unusual for this time of year. This is usually when people are pulling in ahead of Christmas, as you mentioned. So we're definitely seeing that a lot of that front loading took place. Now, there is sort of a very temporary surge right now of folks trying to get air freight in, especially from these Southeast Asian countries where you have an August 1st deadline for the higher tariffs. And they're saying, hey, let's get these goods in as fast as we can. So we've seen a lot of containers that were going to go ocean freight switch to air just to be able to beat that deadline and pay a lower duty rate.
But bottom line, you don't expect necessarily a lot of shortages going into holiday?
No, not really. I mean, I think people really saw these tariffs. We knew since last November when Trump got elected that there would be higher duties. And so people that first half of the year did a lot of front loading. And then they kept the duty rates low all the way until right now in August. So people managed to move goods in knowing that these higher duty rates would be coming. So we'll see. I think if you see shortage, it'll be because these tariff rates go way up and it starts to cause businesses a lot of pain. But that'll take many months from this August 1st period to see how it shakes out into the business world.
So what do you see overall, Ryan, for demand? Like which routes are more heavy demand and which ones are lower?
Well, the China to U.S. trade lane is down about 16% year over year. That's actually seems kind of good from our perspective, because where we were when the duty rate was 145% for those 5 weeks after the April 2nd announcement, you saw at that moment bookings, ocean freight volumes fell by 60%. So right now we're only down 60%. And it's like, okay, it's like pretty stable really in the scheme of things. China reports that their overall exports are up 5%, but to the U.S. is down 16%. So that's quite a trend. And then what's really happened, at least for the last 90 days, was a huge surge out of Southeast Asia, Thailand, Vietnam being two of the big winners there. But of course, they've been hit with higher duty rates all announced for August 1st. We're still waiting for the Code of Federal Regulations to actually make that official. As of right now, we just have some statements from the president, which that's not how customs duties work. So we're all waiting to see when the actual rules come out and what they look like.
But that's Southeast Asia to the United States. What about to Europe and to other places outside the United States? What does that look like?
I mean, you see the things are relatively normal at this point. The consumer demand, I mean, no one's like pointing to Europe as this huge booming consumer demand, but you also they haven't had big tariff changes or anything. So it's pretty stable in terms of the scheme of things.
Meantime, Ryan, a few weeks ago, we were paying a lot of attention to the Middle East and the Red Sea and the Straits of Hormuz. We have had the Houthis try to get active in sinking some vessels, but how would you characterize the risk over there right now?
Yeah, I mean, there was some hope with the ceasefire that we saw between Iran and Israel and Trump's efforts to bring some sort of stability to the region, that maybe that would lead to the reopening of the Red Sea and the Suez Canal. Container ships have not been transiting the Suez Canal since December of 2023. And that is now out the window. The Houthis sank a cargo ship in the Red Sea recently. And so now, there's no one who's thinking, okay, we can now return to the Red Sea, at least for the foreseeable future. That's a really big deal for ocean freight. Obviously, the containers going through there, I think it's around 30% of world's container traffic used to go through the Red Sea on an annual basis. So the rates have been artificially high because of that, and it looks like they're going to stay higher until that changes.
Yeah, arguably a bigger issue for Europe than for the United States, but it does affect everybody. Ryan, appreciate it. Really good survey data. I imagine you are really busy. Come back soon.